Where are we right now in terms of bullish or bearish?
I think that attitudes were quite bullish prior to a few months ago, with the exception of a brief respite during the pandemic. We've been in a bullish climate since the end of the global financial crisis in '09. Not wildly bullish, certainly not what I would call euphoria, but optimistic. And that has been crimped now. A lot of the big name stocks are off 50, 70, 80%. The whole market is off, I guess, probably 15% from the high. So I would say that attitudes are more balanced today. But when there's euphoria, when there's optimism, when there's greed, when there's risk tolerance, and so forth, that's a very difficult climate for the value investor to find bargains. So we're happier today than we were 6 months ago. I don't know if we're going to be happier 6 months from now. That is to say that the bargains will be more pronounced. But at least, as they say, the bloom is off the rose.
At a time of such incredible uncertainty, how do you position seeing value now, but also preparing for seeing more value in 6 months?
One of the 6 tenets of Oaktree's investment philosophy, which we established when we started in April of '95, and I've never changed a word, and I believe in thoroughly, is that we're not market timers. And that means mostly 2 things. We never sell to raise cash to prepare for a decline. And we never say it's cheap today, but it'll be cheaper in 6 months, so we'll wait. If it's cheap today, we buy it. If it's cheaper in 6 months more, we buy more. And I think that works much better than an assertion that we know where the market will be in 6 months.
How much are you trying to game out where inflation is going to go over the next 6 to 12 months, considering the fact that I know that you do not time the market or look at a sort of day-to-day price swing kind of issue, but this really does determine how important some of these returns will be going forward?
Yes, it does, but I don't think there's anything to be known on that subject, and I'm sure we don't know it. And another tenet of our investment philosophy, there are only 6, we're going to touch on 2 today, is that our investment decisions are not based on macro forecasts. Macro forecasts are very important. The only problem is they're rarely right. And more importantly, any one forecaster is rarely right more often than the others. So we don't make our decisions on that basis. We are what's called bottom-up investors. We invest on the basis of micro, not macro, companies, industries, securities, and we feel there, through hard work and skill, we can get an edge.
So where are some of the industries, some of the areas that you're actually seeing deep value?
They are much more spread around than they were before. Some growth names are offering much better value than they did a year or 2 ago, down 70%. But, we continue to find opportunities throughout the investment universe. The prosaic industries are also offering good value.
When you talk about the global investment picture, I know over the years, especially as the U.S. yielded less and less and yet less in real terms and in nominal terms, you looked overseas, in particular to China,
yes,
as a potential area of prospective return. Has that changed as yields have gone up in the U.S. and frankly the economy has slowed so substantially in China?
Well, on the one hand, we have a preference for investing in the U.S. The U.S., in most regards, has the best economy in the world, and it has an excellent environment for rule of law, for being able to predict the outcome when various stakeholders' rights come into conflict. That's very important to us, especially you mentioned our business in distressed debt investing. That's very important if you're going to buy distressed credits, to be able to predict how we'll be treated by the law. On the other hand, From time to time, other parts of the world offer better bargains. We have the best in the U.S., but the best usually doesn't come cheap. So, and on the third hand, we like to have some diversity in our portfolio. So, you know, we've been investing in places like China and India in the last couple of years, and absolutely will continue to do so. When I hear people say, you know, I've made my living for the last 50 years investing in the things other people said were uninvestable, high-yield bonds, distressed debt, emerging markets in '98, et cetera. And when I hear people say that China's uninvestable, to me, uninvestable says maybe there are some bargains there if everybody else is boycotting that sector.
How fully invested are you? Are you always fully invested?
We strive to be fully invested. Again, we're not market timers. Market timers say, well, right now we want 20% cash. We strive to be fully invested. Our clients hire us to invest in our asset class, not to time the market. And again, if better bargains arise, I'm always confident that we'll be able to raise more money to take advantage.